Welcome to Bears in Exile. Today is October 1st, and we're going to take a look at the financials. We can't have a rally without the financials. They have gotten extremely beat up as of late. And, see if there's a turning point coming and if we're due for some more chop or some more free fall. Anyways, away we go. We'll be looking at Bank of America, Citigroup, Wells Fargo, comprising the big three, and also JP Morgan, and the ever popular Goldman Sachs. In addition to that, we will look at FAS and XLF and see if we can find any correlation. And starting off with Bank of America. Not my favorite bank. I don't do business with them, but regardless, they're huge. Well, as we can see, we closed on Friday below the lower price consensus level. We have the short-term moving averages pointing down, middle Bollinger Band above them. These have just gotten slammed with all this euro nonsense. We have not breached the floor, so at least it has that. Can it bounce off of that? Well, let's take a look. CCI has room to move on the downside and is clicking down. 14-day RSI moving average slanting down, pointing down. Stochastics, both of them, pointing down. Getting close to oversold, but room to move. RSI pointing down, room to move. MACD histogram pointing down with room to move. Well, that's not attractive whatsoever. At first glance, I would say, yeah, this one looks like it's due for some more hurt, especially once it takes out the floor, which it's so close. If we look at black box number 1, this is kind of interesting. We have a tightening of the minor trend. Doesn't have really much wiggle room at all. So that would tell me that it's going to bust out in one direction or the other. We have the major trend pointing, well, actually it's expanding, but so it must be getting ready for some sort of a move. But we do have the extreme trend still pointing down. Not attractive. Not exactly the greatest read, since this minor trend is so compressed and so just right in the middle of everything else. So on the upside, we should be able to see 725 if it gets a good rally. That would still be lower than the previous one. That's not a good sign. Even on the highest trend line is still lower than its previous. So that is not encouraging at all. And then on the low side, maybe 510 and 450. Certainly there's enough room that it could meet either of those if it were to fall apart. Well, how about divergences? I'm going to the 60 minute and see what we can find. Well, we do have divergence in the stochastics, although this move over here may not be done, in which case this can be invalidated really fast. And then you have one in the RSI. That one seems to be pretty valid at the moment. You have a very mild one in the histogram. So maybe this one will get a pop of some sort in the not too distant future. But I certainly would not count it as being strong enough to break out of all of this. Citigroup. Well, it's not attractive. It's not as ugly as Bank of America. We have a floor down here, so there is a little bit of breathing room. We are below the lower price consensus level. We do have the short-term moving averages pointing down, although they does not have good separation. But look at this. We have the 14-day RSI moving average. It's actually evening out. But if it were to point down again, notice the confluence of the stochastics. That would be a very strong, very ugly move to the downside if it was able to get it. We have a downtick on the MACD histogram. If it's able to go into negative territory, that'll be really bad. CCI ticking down, RSI ticking down. 60-minute, do we have anything? Very mild on the stochastic, positive divergence. That can be broken in a moment though. Not anything to hang your hat on. Yes, there is in the RSI. It is mild. Massively mild on the MACD histogram. Nothing really to count on. That's not attractive at all. How about black box? Oh, this isn't good. Bounced off of the bottom, went out at the top, and now if it's true to form it should go back to the bottom, which is just above 24. Certainly the secondaries seem to indicate that that would be likely as they're sloping down. We have the hook on the MACD histogram. Not attractive. And Wells Fargo, which I do happen to like and I do bank with. Look how much better this is. It's above the major price consensus level. It is trying to, it keeps bumping into the bearish bar. We have the middle Bollinger Band. Well, now it's in the middle of the short-term moving averages, but it was underneath it. We do have the confluence with the stochastics and the 14-day RSI moving average for pointing down. Not a good sign. We have the hook on the histogram. Not a good sign. Downtick on the RSI, CCI. But at least it has some levels that would help to catch it. That looks so much better. Not to say that it can't tank with everything else, because certainly it can, but it certainly looks much, much better than either Bank of America or Citi. 60-minute, do we have any divergences? Very mild in CCI, non-existent in the stochastic, mild in the RSI, extremely mild in the MACD histogram, which can be broken real quick. Not attractive, even the better bank. Not pretty whatsoever. How about our market manipulators? JP Morgan. Yep, very similar. It still has a lower floor to take out, but it's not too far away. Short-term moving average is pointing down. 14-day RSI moving average is lower than the banks, but look at the stochastics meeting up with it and hooking over. Not a good sign. At least it had an uptick. Well, no, it didn't. It had a downtick on the histogram, but it went to totally neutral. Also not attractive. Way below the lower price consensus level. Sure doesn't look like we're going to have a turn in the financials. 60-minute looking for divergences. Yes, we have one in the stochastic. Yes, in the RSI. And that ultra weak one we keep seeing in the histogram. At least that's a little bit more. You know, that's actually a not too bad one on the stochastic. Certainly it can be taken out, but much more room than the others. Beyond that, in the 60-minute time frame, we can see that it went through. It did not. It tried getting through the bearish bar. It did. Came back for a test, and the test failed, and now it's below it again. And we're below the lower price consensus level in the 60-minute time period. Not attractive. How about Goldman Sachs? Everyone thinks that Goldman will always come back, and it's not a bad thought, really. Notice we do not have quite the angle of the 14-day RSI moving average to the downside yet. It's pointing down, but it's very mild. Notice the stochastics are already below it. It would be much worse if it was on the same level or above and then pointing down. But we do have the short-term moving averages pointing down, middle Bollinger Band line above them, and all the other secondaries clicking down as well. Certainly not attractive. That floor is not far away. 60-minute time frame, very similar to JP Morgan. Did a test of the bar, broke through it, came back for a back test, failed, everything pointing down, except for the RSI, and the stochastics are very low already. Just not attractive at all. FAS, how about this? How about the ETF? Well, we have a floor down here. We do have a decent amount of room to move. Look how far it has fallen. This is crazy. All the way from 35 down to 10. Gross. Now I do think that when the rally comes, the financials are going to be a steal, but news-wise, who knows when that's going to happen. FAS below the lower price consensus level, short-term moving average is pointing down, but they do not have good separation as of yet. Doesn't look that strong. Just like Goldman, the stochastics are already below the 14-day RSI moving average and have their turn. Everything else ticking down. I guess that's to be expected. And divergence in this 60-minute time frame. Yeah, we barely have one in the stochastics. I think that'll be broken. Yes, we have one, a minor one in the RSI, that extremely minor one in the histogram. Nothing in the CCI. Not attractive at all. XLF, any difference whatsoever? No, it's the same darn formation. Everything's just moving together, and they're not even differentiating themselves at all. So no need to rehash all of this, because it is exactly the same. Yeah, exactly the same. Well, there you have it. There is a quick peek at the financials. Still massively ugly. Still no sign of a turn. And we will try to do an update to this every so often, maybe once a week, until it gets interesting. But as of yet, it certainly does not look like the time to buy. Still, certainly looks like it is an opportunity at some point in the future, because saying that it goes down to 8 or 9 or 6, being at the bottom with options for a run up to 35 is a little extreme. You can cut a lot of that off to 20, 23 or something. That would be an incredible gain. So anyways, I will keep my eyes peeled, and if something changes, I will definitely point it out. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.